All right, welcome everyone. We're going to wait a few moments to, we have several people joining our session, so we'll just give another minute before we get started. We'll wait just a few more minutes. I see several people are still joining the session. All right, let's go ahead and get started. Well, welcome everyone to our program today, Numbers Everywhere. We have an exciting session today planned for you. Our presenter is going to be taking you through, all the basics about what needs to go in that basic financial toolkit. Really a critical topic as you're running your small business. So let's move forward. Thank you. My name is Paula Whittekind. I'm the CARES Program Supervisor with the Maricopa Small Business Development Center, or SBDC. Our presenter today is Mike Bull. He is a business analyst with the Maricopa SBDC as well. And he's been a counselor with us for about 2 years or so, maybe a little bit more than that. He's a previous business owner, 15 years, and also a business consultant. So Mike's going to take you through all the details of the financials today. But before I turn everything over to Mike, I'd like to just give you a brief overview of the SBDC and who we are. So the Maricopa SBDC is part of America's SBDC Arizona network. It's actually, it's actually a national network, but also the Maricopa Center is part of the Arizona network. And the offering includes no-fee counseling, training programs such as this, and actually also some great resources, which I'll highlight for you here in just a few slides. At the Maricopa SBDC, I'll just back up a little bit more before we move on. We do have, as part of the Maricopa SBDC, about 17 counselors working across Maricopa County. Although with COVID right now, we are all working virtually. So we're here to help our small businesses. That no-fee counseling that you see on the screen, we're able to do that because we are funded by Maricopa Community Colleges and by the Small Business Administration, and we also have our partnership with the Arizona Commerce Authority. Go ahead, next slide, please. Now, our technical assistance covers a wide variety of areas. Currently this year, we've been helping all of our small business clients navigate those disaster loans, and we continue to do that. We also help our clients getting lender ready. Especially during COVID right now, many of our clients are getting to the situation where those disaster programs, the money's running out, and so they're looking for additional capital sources. So we can help you, or we're helping our clients with this as well. We also offer financial review and a resiliency assessment, marketing assessment, planning, sales strategy, just general business development in many different areas. We have experts in manufacturing, technology commercialization, export and international trade, and also the PTAC group covers the government contracting world. So if you do need help, I urge you to look to SBDC. We have some great resources to help you out. And then just briefly, before I turn things over to Mike, as part of our service to our clients, we have a variety of tools available at no cost. So our Growth Wheel, we license that from the company Growth Wheel, and really it's a self-paced toolkit that we use in counseling that covers all different areas of business development, including different templates and frameworks and articles to help guide you as you grow your business. For those of you who might be interested in developing a business plan, and if you haven't developed a business plan, it's really critical that you consider that. We do offer no-fee licenses to LivePlan. So it's an online platform to help guide you through developing a comprehensive business plan. We also can provide financial benchmarking data through our ProfitSense tool, as well as marketing research kind of tailored to your specific needs through our sbdcnet.org. And then also we have access to IBIS Industry World Reports, also another great tool and resource as you're planning for your business. So with that, I will turn things over to Mike Bull to take you through our Numbers Everywhere program.
Thanks, Paula, for the introduction, and welcome everyone to Numbers Everywhere, or as we like to call it, fun with figures, or lots of other things. I hope everybody is enjoying the nice rainy day we have today. I apologize that we can't be in person. This is COVID edition, and this is what we get. We don't get to sit around in our training room and offer you drinks and snacks and covered parking and all that stuff, but I hope you enjoy it anyway. However, I do want to try to make this as interactive as we can. So please, as we go through this, raise your hand, use the Q&A button or chat. I think in this webinar, we don't have chat, do we, Laura? Just Q&A. So anyway,
we do have chat, Mike, and we also have Q&A, and shortly here I'm going to be launching a poll so that way we can get a better idea of who is here with us today, how long you guys have been in business, so that way we know how we can better support you during this webinar.
Perfect. But anyway, I want people to be, I want them to either raise their hand or do something, but don't be shy, because if you have a question, we want you to just ask it. So what are we going to be covering today? We're going to be covering some introduction to some business basics. We're going to talk about some of your basic accounting reports, and we're going to talk about how to use numbers to make decisions.
Great, and at this time I'm going to be launching the poll. So if you guys could please answer that, that would be greatly appreciated.
Okay, we're going to ask them to multitask, are we?
Yes. And we'll leave the poll open for about 30 seconds.
Okay, I will wait till that happens because I would like to see what we've got going here.
All right, and looks like we have a few people who have yet to answer, but we did get a majority of them in, so I'm going to go ahead and end the poll now.
Okay.
And we have about 23% of you who are attending currently who have not yet started your business. 23% of you have been in your business for 1 to 5 years, Mike. And then 5 to 10 years is another 23%, and 23% of our attendees have been in business for more than 10 years.
Wow, cool. Quite the wide variety then. That'll be good. So I want to start this by saying that I understand that most people in business fall into one of two categories. Either those who are fascinated with numbers or those who are scared to death of them and hate them. So if you're in the first category, you were probably delighted to see that this webinar was offered. However, if you're one of those in the second category, you're probably intimidated by the very prospect of sitting in this seminar. So I promise I'll try to go slow and make it understandable and be gentle as we go along. So, introduction, key to business success. Number one, if you shy away from dealing with numbers, it's pretty obvious that it's easy to get into financial trouble. You need to learn to pay attention to your ongoing financial situation. It'll help you avoid unpleasant surprises. Even if you leave the number crunching, bill paying, and financial data entry to someone else, please familiarize yourself with how to read and understand your financial statements. I call this outsourcing the work, but not the knowledge. Too many times I talk to clients and they say, and I ask them a question about their finances and they have absolutely no idea. They say, oh, I don't know, my accountant does that. My bookkeeper takes care of that. Well, again, it's fine to outsource the work, but you're the one that's responsible for knowing your finances, and so don't outsource your knowledge. Numbers help you make better business decisions and retain more control over your operations. Probably why you went into business for yourself anyway, was to have more control over what you're doing. So again, don't give that control up. You're the one who's in charge. Numbers represent all of your decisions. So take heart, they're neither magical, mysterious, or menacing. They merely reflect other decisions you have made previously in your business planning. So if you decided to advertise each week in the local newspaper, there's a number attached to that, and you should know what that number is. If you projected sales at a certain level, there's a number attached to that decision as well. Numbers are not just details. They're the vital signs of any business. You have to understand your company's numbers to realistically assess the condition of your business. Numbers are the language of business. Learn to speak it fluently. Okay, I understand numbers are boring. Things don't get too exciting around here. So every once in a while, I'll throw in a cartoon just to kind of break up the monotony a little bit. So yes, I'm certain that there is absolutely no cooking of the books. Yeah, well, a little reheating might not hurt anybody. All right, first things first, separate business and personal finances. If you're just starting a business, please keep this in mind. If you've been going for a while, hopefully you're already doing this. Maintain a bank account specifically for the business. Don't be tempted to use your business debit or credit card for personal expenses. I don't care if you have a credit card that's in your name and not the business name, but if you do, use it only for business expenses. Have a separate card for your personal expenses, because this keeps all income and expenses separate, and that simplifies record keeping and tax filings. Use accounting software. If you don't have it, get it. If we have time later in the webinar, we can talk about that a little bit. Because if you're audited by the IRS, the burden of proof is on you to make sure you can prove all of your income and expenses. Mixing business funds with personal funds can pierce the corporate shield. And I'll tell you where this is really important. Everybody knows that when you start a business, you should either get an LLC or incorporate. And the whole purpose of that is because it keeps your personal assets from getting attacked if something happens in the business. So it separates the business from the personal. The problem with all of this is if you don't separate your business from personal, a savvy attorney can certainly go to court and say just that. Hey, these guys are mixing business and personal funds. They have no intent of showing this as a business. That totally can pierce the corporate shield, as they call it. So be aware of that. Just because you have an LLC doesn't automatically protect you. It starts, but you have to actually act like you're a business. All right, reading your financial statements. Get in the habit of reading them. At least monthly. Make sure you understand what you read. Again, the knowledge that's in those is what you need to have. Make your financial statements a good summary, not an overburdensome list of details. Again, I find clients who want to have a profit and loss statement that's 4 pages long and it's all detail because they think that that's what's needed. A financial statement should be a summary of what you're doing, and it should be something, if it's got too many things in it, you don't look at it. So you should have a summary of things. It should be what you look at all the time and understand. Sure, I want you to keep details. I want you to keep everything you can. But once you have a summary of something, you can see what area is going wrong. Then you can drill down into the details. Track items such as sales receipt on a daily or weekly basis. That's one of the most important numbers in a business. What's your revenue? Where are you going on a weekly or daily basis? Don't wait for reports to come back from the accountants before knowing your financial position. This is another thing I hear a lot. Oh, my accountant's a few months behind. Well, if he's a few months behind, how are you making decisions for your business today? Determine a few numbers that you like to keep track of. You don't have to memorize the whole report. Find the numbers that are important to you. We're going to be talking a little about this as we go through it, but always know you don't have to memorize the whole thing, but you should know a few key points. Set financial policies. If you're just starting in business, this is kind of it's hard to do, and I get this question a lot is, well, when do I start? When do I get accounting software? When do I start doing stuff? Well, my suggestion is from day one, start setting the policies. You know, if money comes in, there should be a way you handle that. There should be a bank account it goes to. There, you know, if you have credit that you're extending, there should be a way to keep track of that. And you should keep track of those things and keep your policies intact. Even after you've established the habit and you think that it's easy, because a lot of companies, even big companies, get in trouble when they think they can relax on them. And stay on top of your finances. Again, when I asked for documentation to support your expense claim, I was hoping for something more than a sticky note saying, trust me. Okay, our first definition, we'll be talking about some more of these, but cash versus accrual. Do you know the difference, and why should you know the difference? So basically, the difference lies in the timing of when sales and purchases are recorded in your accounts. So under cash accounting, it recognizes revenue and expenses only when money changes hands, and accrual accounting recognizes revenue when it's earned and expenses when they're incurred. So for example, I own a shop and I sell my product, and I give my customer 30 days to pay. In cash accounting, when that customer pays, so they buy, let's say they buy something in December 15th, and so they have 30 days, it's due to you in January. In accrual accounting, you're going to count that income as income when goods change hands. So today is when you would count that. Cash accounting, you would count the income in January or next year when you actually get the cash for it. The same goes with expenses. So if you bought that bicycle or that product, whatever it was, and your vendor gave you credit, then you wouldn't count that as an expense in December. You would only count it as an expense when you paid for it and actually sent a check to them. So the question's always, what should I use, cash or accrual? And I'm going to say, how about both? Most computer softwares, you can easily toggle from one to the other and back again. So that's not an issue. Most accountants, when you talk to them, are going to tell you they want you to do your accounting on a cash basis. Most of that, just like what we said, is because they don't want you to account for income in December when you haven't got paid for it. So they can postpone your amount of income tax. That's fine. I don't care. I think cash at tax time is a good way to do it. However, to manage your business better, I strongly urge accrual accounting, because I want to match up my sales with the expenses it costs to get them at the time they happen. I can manage things better, and I don't have to go off and try to figure out how much of this have I sold, but I haven't collected yet, things like that. So you can actually do both. All right, I'm going to talk about financial statements. And the first one is the profit and loss statement. This is also called an income statement. Some people call it the P&L. That all means the same thing. It is the same statement. I'm just going to check. It looks like we have some questions. Maybe before I go on, we should look at them. Is cloud accounting better than a disk when you can install? Good question. We will, again, accounting systems, I'll talk about those at the end here. And so that's kind of what all of these are questions about. So yeah, Pedro, let's talk later about that. Sorry, anything else out there, Laura? You're on mute.
I don't see anything. I'm monitoring
Okay.
the chat right now, and I don't see any others.
All right. We're going to go on to the profit and loss statement. Like I said, it's also called the income statement or the P&L statement. This covers a designated period of time, either a month or a quarter or a year or even a week if you want to look at it that often. It demonstrates the ability to generate profits. and it shows a series of things. It shows revenues. We talked about this. Your revenues, I suggest somewhere in the neighborhood of 2 to 5 revenue streams, because you want it to be a summary of things. For instance, in a restaurant, I might want food revenue and I might want alcohol revenue. And I'll tell you the reason for that is because the next thing is cost of goods sold. And I say preferably that they match up to the revenue streams. And part of this is because the cost of goods for food in a restaurant is vastly different than the cost of goods for drinks and alcohol. So I kind of want to keep those separate so I can look at that. If I own a bicycle shop, I might want to say my revenues are for new bicycles sold, maybe for used bicycles, and then a service line, because those are distinct streams of revenue that I can associate with different costs of goods. Having one may not be enough. Having more than 5 might be too many. So the next thing that is shown on the P&L is the cost of goods sold. Another definition here that we need to make sure everybody understands on cost of goods sold is this is the cost that goes into the items you sell. So a restaurant, it would be the cost of food, the cost of the drinks. If you were manufacturing furniture, it'd be the cost of the wood going into it, the upholstery, the labor to produce it, that sort of thing. It is not anything else other than that. A lot of service industries, you may not even have a cost of goods sold. So don't get hung up if you think you're missing out because you don't have that. It's okay. The next thing P&L show is their gross profit. So revenue minus your cost of goods sold is going to equal your gross profit. That's expressed in dollars. Another term that is used quite often is your gross margin, which is expressed in a percentage. So if you ever watch Shark Tank, watch The Profit, one of the biggest questions they ever ask is, what are your margins? Well, that's what they are, expressed as a percentage. It's your revenue minus your cost of goods sold. The next section is what we call fixed or indirect expenses. This is everything else that doesn't go into the price of your goods. So rent, utilities, administrative wages, all of that sort of stuff that just kind of goes along no matter how much you sell or don't sell. Subtract those expenses out of your gross profits and you end up with your net profit, your bottom line. So that's what a P&L shows, those 5 areas. And here's an example of one. This company happens to sell and install artificial grass. So on income, they've decided that they want 4 basic lines. You know, the cost of the grass itself or turf, EnviroFill, which is what makes things pet friendly. That's an additional thing added on. Additional services, if someone wants something other than artificial grass, like pavers or a patio or a sidewalk, something like that. And then of course the installation sales, you know, once you how you install it. Now those are going to be matched up with the cost of goods sold. So you're going to have a turf expense related to the sale of the turf, EnviroFill expense, additional services, contract labor for the installation. So those that match up with the sales, and you can find your cost of goods sold for each of those individual items against your sales lines, as well as the total cost of goods. Remember, income minus cost of goods equals your gross profit. That'll be in a dollar on this, a dollar expressed as dollars here. And you can also get percentages. Then the indirect expenses are all of these other things. This company likes to divide them up by department so that they can see what their total installation, sales, admin. Again, if simplifying things and you're summarizing, you might want to look at your installation expenses if they start down with the individual things. Once you deduct the expenses from your gross profit, you get your net income. Simple as that. All right, the next form that we use is called a balance sheet. And a balance sheet simply shows what a company owns and what a company owes. It covers a particular point in time. It's not over a series of time. And it demonstrates the cumulative financial health of a company. It shows three basic things: assets, liabilities, and owner's equity. So this is where, if you've ever heard of the accounting equation for a balance sheet, and you always have heard that a balance sheet has to balance, that's where this equal sign comes in. So assets have to equal liabilities plus owner's equity. What's under assets is everything the company owns: their cash, their accounts receivable, their inventory, their building equipment, and land. Liabilities is everything a company owes: accounts payable, notes payable, employment taxes payable, credit cards, loans, that sort of thing. And then they have to add in the owner's equity, which is how much an owner has put in to start the company, draws they've taken out. If it's a corporation, they have stock, retained earnings, and net income. So this is what a typical balance sheet might look like. You have your assets, your current assets versus your fixed assets. You have liabilities and equity, your current liabilities, your long-term liabilities. In both of these, the general definition for a current versus long-term is current is usually due and payable within a year. Long-term are over that. So if you have, you know, a building loan or a car loan, that would probably be a long-term liability. Accounts payable that you have to pay next month would be current. And then after you get your total of those, then the total liabilities and equity should equal the total assets in the balance sheet balances. You've also heard this term, chart of accounts. When you set up an accounting system, it's going to ask you, one of the first things is to set this up. And basically all that is all the lines, which are called accounts, that are found either on the P&L or the balance sheet. And that's it. So you'll see our P&L here on the left, our balance sheet here on the right. You will notice that every line on here on the balance sheet does not exist on the P&L, and every line on the P&L does not exist on the balance sheet, but every line total here has to be in your chart of accounts. Now there is one point where these two intersect, and that's right down here, the bottom line. So net income on your profit and loss actually carries over to net income on your balance sheet. That is the only line between the two that is the same. And without that, you don't get a balance sheet that balances. Okay, more forms that are used and you'll hear of. A statement of cash flows. I'm not going to go into this too detailed because it could probably have a whole webinar on itself, but basically it covers a designated period of time. It demonstrates the ability to pay bills. It contains both income statement and balance sheet items. And then things that affect cash flow. So if we go back to our accrual versus cash accounting methods, if you have a cash accounting method, you're probably pretty close on your cash flow anyway, because it determines how much cash you actually have and are spent. Accrual method, it's a way of figuring out how much cash you have and what you have to do with it. So things that affect it: cash on hand, accounts receivable, accounts payable, inventory, credit cards, loan payments, sales tax, liabilities, and depreciation. The strange thing is that you can show a profit and still run out of cash. So it's very important to understand what your cash flow is and your cash flow statement. And like I say, that's a whole nother webinar, and maybe someday we'll put that together. But just because you're showing a profit doesn't mean you've got cash. However, if you do it right, then, you know, your cash just flows and everything is good and we're all happy, right? Okay, some other quick financial forms that you may run into, may use, may need. Sources and uses of funds. So basically this shows where money needs to be spent, uses, where that money will come from, sources. And it's used a lot for startups, or if you're adding a new line of products or adding new services or expanding in any way. Because what's going to happen is you're going to want to say, you know, hey, this is how much money I need because I'm going to, let's say I'm going to expand my restaurant and I'm going to add a new room to it. And I have to spend money on new furniture and fixtures, a new bar. I have to upgrade the bathrooms. So knowing what all of that is that you're going to have to spend money on is really important for you to know what you're going to spend. I mean, and then you got to come up with the sources. So, you know, if the uses are going to be $50,000, then you got to figure out where that money's coming from. So, you know, maybe it's all your investment. Maybe you're going to borrow some. Maybe, you know, you've got a rich grandma who's going to give you money, whatever. But at least know how much you're going to need and where it's going to come from. Potential investors, loan officers, they're going to want to see this. Break-even point, we're going to talk about this in a minute, but this shows the point at which sales equal costs and you begin to make a profit. It's a pretty flexible tool. Again, I'm going to show you this one, and it's advisable for all internal planning. Break-even is, as we say, sometimes it's a great goal if you're not making money, but it really should not be a long-term strategy for your business because we don't want to just break even. Startup costs for a new business. This shows the initial investment necessary to begin operations. We see a lot of new businesses start and they think that, well, it's not really going to take me much money. I think I can do it for, you know, a couple $1,000. I got a credit card. I'll just go. You know, you really need to analyze exactly what it's going to cost, you know, how long before you start making money, what it's going to take. And then like the sources and uses of funds. Once you know that, then you can say, okay, I do have a credit card that will cover all of that. Or, oh man, it's a lot more than I expected. Maybe I need to figure out another way to either cut my costs or find my rich grandma again, whatever. The final one is called the assumption sheet. What this is it shows those reading your financial sheet how you determine the figures. So if you're opening a restaurant and you're saying, yeah, I'm going to do $1 million my first year, and you're looking for a loan and you're telling the banker that, yeah, I'm going to make $1 million, he's going to be saying, well, how do you get that number? You know, and the assumption sheet's going to break that down and it's going to say, well, my restaurant will hold this many people. I'm going to turn my tables this many times. My average check's going to be this amount. I have this many people coming through the door. That sort of thing that breaks it down into some sort of detail so that then, you know, someone has confidence in the numbers that you're showing them. Okay, I'm going to blow through some accounting terms just because some of these I think you need to know. Others of them I just want to have them up so that, you know, if we share the slide deck and you need to know what something means, you can always go back to it. Collateral, assets pledged in return for home loans. If you've bought a house, your house is collateral. You don't make the payments on the loan, they take the house. Same with a car. You buy a car, you get a loan, the car is collateral. You don't make payments, they take the car. Same thing with business financing. If there's collateral such as equipment, You don't make your payments, the equipment is collateral, they can take that back. The next thing is debt and equity financing. The difference between the two is debt financing is raising funds for a business by borrowing, often in the form of bank loans. So this is money that has to be paid back on a schedule, monthly payments. Equity financing, on the other hand, is by other people investing in your business, and in return, they're granted partial ownership. You'll probably pay that back at some point, but it becomes a big payment at one time, and then they give up their ownership. Debt service, you hear this a lot, but basically that just means money being paid on a loan. So if you borrow from a bank, they're going to want to make sure you have enough income for your debt service, the amount of money you pay on that monthly. Disbursement, simply money paid out. Your net worth is, if we go back to our balance sheet, it's basically your assets minus your liabilities. Net worth is generally the same as the equity. Working capital, simply the cash available to a company for its ongoing operations of a business. You hear people saying, hey, I need some working capital. A lot of times if you're starting up and you get a loan, and one of the uses of the money is not only to build out the restaurant, but maybe the first month you're not going to have enough customers to make payroll and all of that. So that becomes a working capital issue where you need money for your basic operations. Accounts payable and receivable. Payables, money you owe. Receivables, money people owe to you. Assets, again, anything a company owns. Cash, immediately available for them. Cost of goods we talked about. This is your slide to break the monotony. And we're getting ready to dive back in again. Let's take the question here. Would you expand a bit more on equity financing and how it works? Does the loaner collect on money made by the business while their owner's up until their loan is paid back, and we reclaim the percent of the business? So in a short answer to that is it's negotiable. So if you have somebody that wants to invest in your company, then they will make the decision of whether they want to or not based on what you're offering them. So if you say, hey, I need $50,000 and I'll give you, you see this on Shark Tank, right? Give me 100,000 and I'll give you 20% ownership. And then from there on, it's all negotiable, and it becomes, when do they get paid back? How much do they get paid back? So it works in a lot of different ways. And so if you have that, the Shark Tank example, they always have something to offer, but then you'll notice the sharks will always have a counter offer. Well, if I'm going to give you this much money, I want more equity. And when I have that, generally they want out, I'm going to say, in 3 to 5 years. They don't want to stay in there and be your partner forever. That's just something to get you going. And so then you can, again, negotiate, okay, I'm going to pay you all at once in 3 years, and I'm going to give you this amount of money, or depending upon what the business is worth, that sort of thing. We get that answered? I'm going to assume someone says yes, because I can't see you. Depreciation, wear and tear on fixed assets. It's not a cash expenditure, but an ongoing expense. This is a tax deduction and something that you'll discuss with your accountant to get a depreciation schedule. Equity, again, how much ownership in the company. Fixed assets, generally not quickly convertible to cash, so longer than a year. Fixed costs, again, are your indirect costs, things like overhead, rent, utilities. Gross profit, remember what that is. Revenue minus cost of goods sold. Yeah, good. Liabilities, long-term, short-term, again, over a year. Net profit, that's your bottom line. everything once you get all of your revenues minus all your costs. What is a pro forma? When someone asks for a pro forma, they're asking for projected future performance. So a financial statement projected into the future that, hopefully based on things in the past or on the assumption sheet we talked about. Retained earnings, simply the cumulative net profits earned by the company over time. Okay, enough of that. So keeping records of your deposits. Number one, yes, do it because it helps distinguish between different types of deposits. You'll see that, sure, you have income that's coming in, but you'll also have the owner investments or loan proceeds. In an IRS audit, the IRS is going to request copies of your bank statements. If you got a $50,000 loan, you certainly don't want to count that as income. You want to count that as a loan. So if you don't keep good records, the IRS can just assume that you didn't report off your income, and then things happen and they're not good. Track every expense. You need to do this. It improves your financial awareness. It gets the most deductions possible. It keeps your and then keep documentation to support all of that. Again, this is keeping your personal and your business finances separate. I see a lot of people, they go down to Costco and they buy something on their personal card and they say, oh, that's for my business, but I'll just donate that. Well, that's a tax deduction you're not going to get. These things add up. And it also is an expense on your company that you're not recognizing. And maybe you think you're making more money than you really are. So of course, then you rob from the rich and give to the poor, but you don't get any receipts. My goodness. All right, using numbers to make decisions. This is what I call, if you can't measure it, you can't manage it. And this is going to be our fun extra credit formula with our break-even point. So again, break-even is when you cover all of your expenses, but you make no profit. Yes, it's a goal for some people, should not be a long-term strategy. The basic formula is on break-even, your fixed costs divided by your gross margin. Fixed costs are those at the bottom of your P&L. They're your indirect costs. Your gross margin, again, is your income minus your cost of goods sold, expressed as a percentage. So to break even, if I had $5,000 in fixed costs and I have a 40% gross margin, I'm going to have to sell $12,500 worth of my product just to break even or to have zero profit, just to cover that $5,000. So this is where your cost of goods, if you can reduce your cost of goods, which increases your gross margin, and your break even is 5,000, or your fixed costs are 5,000 and your margin's 60%, then you only have to make or sell $8,333. Would employees still be considered a fixed cost even if they're hourly and hours change month to month? Would we just take an average in that case? So if the employees, yes, I would say in general, if you are paying, if their hours change directly associated. So my furniture example again, if people are in my production department and I don't make any furniture and I send them home, then yes, their hours are considered part of cost of goods. If you're in the restaurant business and you have to have a waitress on staff, no matter if you have 1 customer, 0 customers, or 10 customers, that I would consider a fixed or indirect cost. So here's how you add profit to this and how you can make this a flexible tool. So I can add profit to my fixed expenses. So again, the formula is fixed cost divided by your gross margin. So if I have my same $5,000 of fixed cost and I want to say, hey, what do I have to sell to make $5,000 in profit? Then I can add those two together. I can divide by my 40%. and I can get 25,000 bucks is what I have to sell in order to cover my fixed costs and make a profit of 5,000. So I can do the same with the next one. I have fixed cost of 5,000. I want to make 7,500 in profit, and my margin is 60%. I only have to sell 20,000 bucks to do that. If I want to hire a new salesperson, I can say, okay, if I'm going to pay him 3,000 bucks, how much do I have to sell to cover his expenses? I would take that 3,000, divide it by my gross margin, whatever that is, and get that. You can use this tool for lots of decision-making things in your business. Other metrics that you can use, revenue per hour. How many sales order per number of estimates? I want to see how effective my salespeople are. They make 5 estimates and they make 1 sale. I know, I get that number. I can keep track of that and see if they're improving, who does better, who does worse. I can look at revenues per click. Oh, by the way, just when you figure these out, anytime you have a per, if you don't know this, that means divided by. So to figure out what your formula is on revenue per clicks, it's total revenue divided by total clicks, or per. Revenue per client, total revenues divided by number of clients. How much do I make in my restaurant if I have 25 people coming in and I made, $1,000? How much is my average check? Customer acquisition costs. I like this one for some industries because you can take off your sales and marketing costs, add them together, and divide it by the total number of new clients in that period. So you can say, you can make decisions based on, well, if I change something up, what does my new customer acquisition costs come to? Lots of numbers to use. The important thing is figure out which ones matter to you. So I always make you go home with a little homework, and basically it is find your numbers. What are the most meaningful numbers? What do you want to change? And of course, are you committed to that change? I see a lot of people that want to change, they start tracking things, but then they kind of fall off because apparently they're not committed to that change. You need to track your numbers. You need to communicate them. Finance bleeding into management. If it's not important to you, it's not important to them. So if you're trying to track your employees and figure out how effective they are and how, if you make some changes, does that help them? If you're not communicating that to them, they are not thinking it's important to you. And if it's not important to you, it isn't important to them. So know your numbers, use them, track them, communicate them. And that's it for now. What questions do we have?
I'm not seeing any questions that are popping up. If anyone has any additional questions, please feel free to put them in either the chat or the Q&A for Mike to answer right now.
Okay, is the slide deck available? I think it is, isn't it, Laura?
No, but we will be posting this presentation on our website.
Okay.
So it will be available for those who are attending to go back and review.
Okay. Any recommendations on how to track some of the metrics in the last slide, such as number of new clients? So I'm going to say, yes, there are, and I think this is a perfect opportunity for you to talk to your SBDC counselor about figuring out how to do some of this stuff. It's really hard right now to do that without going into too much detail, but all of this are things that, yes, we as counselors can help you dive into, figure out how to do this. Because part of the problem with numbers is, you're right, how do we get those numbers? How do we know what's what? So yes, I think that's important. Someone wants me to go back to the last slide again. Is that the one?
I think so, yes. And then again, which programs are best? Software programs for accounting, Mike.
Okay, do we have time for this?
We have about 10 minutes left.
Okay, I will quickly go through software. I have to go down here past some things. Okay, so here is a list of 10 accounting software packages that are available just online and things you can do. So I can't tell you what's best for you. You have to figure this out. So here are some of the things that will help you. Number one, what does it cost? Is it desktop or is it on the cloud? Is it a one-time expense or is it monthly? Again, is it online or desktop? Is it available, accessible from anywhere? Can you start small and grow? Is it really double entry? You'll want that. You want, without double entry, you don't get income statements and balance sheets. Construction people, you might need job costing, or other people job costing. Does this accounting software do that? You may need to do credit card processing. Maybe you do, maybe you don't. Does it do estimates and quotes? Does it have accounts receivable and accounts payable modules? Does it keep track of your inventory? Can you do bank and credit card reconciliations on it? So these are all questions that you want to look at when you're looking at those things of software. And basically my suggestion is pick 3 of those and compare and contrast them and look at what these things are that you may want to consider. The online or computer, is it monthly or one time? How many users? If it's a desktop, they may restrict you to 1 user and it might cost you to use more. What kind of special features does it have? Just because it has a lot doesn't mean they're ones you want to use. So make sure it's ones you want to use. And also, will it grow with you? I see a lot of free accounting software packages out there. That's fine as long as once your company starts growing, can that accounting package grow with you? And if it does it meet all the needs that you have? So sorry, I can't answer the which one's best question, but please, use a list to kind of decide what one you think matches up with what you will use it for. Make sense? I'm going to say there's a collective bunch of head nods. Yay. Okay, we'll go back to this one now. Any other questions?
We did have a couple. Can you give any suggestions about how to work with your accountant or bookkeeper? And how often should you run your financial reports?
Okay, your accountant or bookkeeper, you should be on very good terms with them. I know that some of them are going to cost money if you are on too good of terms with them, and you may not want to spend all that, but you should at least be getting monthly financial statements. I would say that is a minimum. You should be getting a profit and loss and a balance sheet from them every month. And of course, maybe about this time of year or a little earlier, you need to start talking to them about tax strategies. Do you need to do some extra stuff for your taxes and whatnot? And it kind of depends again on how much you understand your financials. If you understand them really well and can do the things you need to do with them, then maybe you don't need to talk to your accountant too much. If you don't understand them, then maybe you ought to be in his back pocket a lot to make sure that he is explaining to you what you need to know. And if he doesn't, and you find that you don't have a match, find somebody who you do feel comfortable with. And what was the other question? I'm sorry, Laura.
Nope, that was both of them. Oh, no. How often should you run your financial reports?
At least monthly. And again, I think if you have an ongoing business and you have money coming in, you should be keeping track of your sales weekly, and your expenses weekly. If you have a really good handle on what your sales are fairly consistent, your expenses are fairly consistent, then maybe you only need to just double check on a monthly. But again, that kind of depends upon your situation. And if you're really looking for things to change and you want to really be pressing it, then look at it more often. Do you think small businesses need a CPA or just a bookkeeper? Again, it depends upon your level of acumen with numbers. Most small businesses, I would say, can get by if you have an accounting system to do. A lot of people don't want to do their own taxes, so maybe they use an accountant just for taxes. Some people I know have absolutely no acumen for entering any of their expenses, so they want a bookkeeper to do all that for them. Again, it depends upon your level of comfort with what you're doing and whether or not it is taking time out of your normal. If I am a business owner and I could be spending a lot of time out generating business, and instead of doing that, I'm entering stuff for bookkeeping, then that's not a good use of my time and I need to hire a bookkeeper. How's that? Uh-oh, someone's Google appointment showed 3:30 and he just came in. Yes, it is recorded. Anything else?
I'm gonna pipe in. Hi, my name is Donna. I'm the operations manager. I know Paula looks like she had typed in a few questions in the chat. And I don't know if we have time. We've only got a few more minutes left, but she said, can you give suggestions about how to work with your accountant and bookkeeper? I think you did that already. And then how often should you run your financial reports? Did you answer that one?
Yes.
Okay. All right. You know, we're all
Thanks for your input, though.
Yeah, we're all multitasking here. I just wanted to make sure we didn't miss anything.
Just kidding. Okay, oops, we have one more.
The recorded session will be sent out to all of you, and it will also be posted on our website, which we're going to talk a little bit about right now.
Okay. Show the list of programs again. I'm going to do that really quick right there. Google the 10 best software packages or something to that effect. You'll get a good list and it will probably show most of these. Okay, I'm going to turn it now back over to Laura and let her wrap things up.
All right, so as I said, this recording will be posted on our website, as well as the ability to request counseling services is also located on our website. So if you would have any further questions for Mike and would like to schedule a one-on-one counseling session with him, again, these are no fee, as Paula had mentioned at the beginning of this webinar. You can do so on our website, www.maricopa-sbdc.com, and then click on the register for counseling link that is there. Additionally, we will have multiple CARES and COVID related workshops coming up in the next month or so. We're going to be focusing on marketing, restaurants, supporting them during this time, funding your business during the pandemic, and also building your financial strength during this time. So these are all very exciting workshops that we have coming to you. You can register for those the same way you registered for this workshop, maricopasbdc.com/events. We will also be posting these on our Facebook for you to easily access. And again, make sure to visit us online. We also have a COVID tab on our website where we post updated information regarding businesses and operating during this time. We also have a list of all of our team and their bios, so you can get a little bit of background. You can also read a little bit more about Mike's background. We have a list of COVID-related resources for each of you guys in every single city here in the Valley. And we also have our training calendar posted on our website for upcoming events. Also, please follow us on social media because we do post regularly on there. And we also share other events that are happening throughout the Valley with our partners. And thank you all for coming. Again, this recording will be sent out to each of you, and we will be posting it on our website.
And I would like to say thank you guys for attending. And with that, we're out.
We are. Thank
Thank
you all.
you.
Have a good evening.